In a city where every square foot can make or break fortunes, one company has quietly risen to command the skyline of America's most iconic metropolis. In the last 6 months, SL Green Realty Corp has seen a striking surge in its stock price, driven by a series of audacious property moves, high-stakes partnerships, and a fierce belief in the resilience of New York's commercial core. In a sector battered by remote work, rising vacancies, and bearish headlines, SL Green is executing a strategy that seems almost reckless, yet remarkably effective. This isn't just another real estate trust. SL Green is New York City's largest office landlord, a heavyweight controlling more than 28.6 million square feet of prime Manhattan real estate. From the shimmering spire of One Vanderbilt to the timeless Gray Bar building and the massive glass and steel edifice at 245 Park Avenue, SL Green Realty's portfolio reads like a who's who of Manhattan's most recognizable addresses. Revered by institutional investors, closely scrutinized by Wall Street analysts, and envied by rivals, the company's history is a masterclass in opportunistic deal-making, turning neglected properties into crown jewels. At its core, SL Green's success is built on a deceptively simple formula: find undervalued, overlooked, or distressed assets in prime locations, invest aggressively to modernize and reposition them, and hold through the inevitable cycles of Manhattan real estate. Under the watchful eye of CEO Mark Holliday and President Andrew Mathias, seasoned operators who've seen booms, busts, and everything in between, SL Green has navigated crises from the 1980s to 9/11 to the Great Financial Crisis and the pandemic, turning each challenge into an opportunity. Now, as New York's office market writes its next chapter, SL Green is once again in the spotlight. The spark behind SL Green's resurgence? It came down to two audacious, high-stakes plays that not only defied conventional wisdom, but reshaped the conversation around Midtown Manhattan's future. First, One Vanderbilt, a staggering $3.5 billion gamble on the heart of Midtown, greenlit at a moment when pandemic fears and the rise of remote work had many declaring the death of the Manhattan office tower. Rising 1,401 feet above Grand Central, this soaring glass spire wasn't just a piece of architecture. It was a statement of defiance. When it opened in September 2020, it did so with 70% of its space pre-leased, a remarkable feat given the economic turmoil swirling around it. Today, it stands over 90% occupied, commanding rents north of $300 per square foot, attracting an elite tenant roster that reads like a financial who's who: TD Bank, Carlyle Group, MSD Partners. One Vanderbilt didn't merely survive the pandemic. It redefined what a modern trophy office could be in a post-pandemic city. Then came 245 Park Avenue. What began as a mezzanine loan to a financially unraveling Chinese conglomerate turned into one of New York real estate's most strategic takeover stories. In 2022, after the borrower's financial collapse, SL Green exercised its debt position to seize control of the 1.8 million square foot tower, at a fraction of its peak valuation. The asset was bruised, high vacancy, deferred capital improvements, and a market teetering on the edge of systemic distress. But SL Green, true to form, didn't flinch. Within a year, they secured a lifeline deal, selling a 49.9% stake to Japan's Mori Trust at a $2 billion valuation, a transaction that reverberated through Wall Street and the global property markets, signaling that Manhattan's trophy office sector wasn't dead, it was recalibrating. Together, these two bold moves ignited a resurgence of confidence, not just in SL Green's strategy, but in the enduring gravitational pull of the Midtown Manhattan skyline. It was a timely reminder that in New York real estate, fortunes are made not by following the herd, but by betting big when others hesitate. Some of SL Green Realty's most defining acquisitions over the years tell the story of a company that's never shied away from risk or opportunity. It began in 1998 with 420 Lexington Avenue, now known as the Gray Bar building. At the time, Midtown Manhattan was still shaking off the hangover from the early 90s recession. Led by Stephen L. Green, fresh off its IPO, saw potential where others saw problems. The Gray Bar building, a fading Art Deco landmark, was more relic than real estate prize, carrying a 20% vacancy rate. But Stephen L. Green had a knack for spotting value where others overlooked. The company acquired the leasehold for $165 million, rolled up its sleeves, and launched a full modernization, upgrading lobbies, systems, and amenities while preserving the building's architectural soul. Within 2 years, New York Life signed a major expansion, and the property's fortunes reversed. That single deal would go on to anchor S.L. Green's Midtown strategy for decades to come. In the early 2000s, during the uncertain aftermath of 9/11, S.L. Green Realty doubled down, acquiring 625 Madison Avenue. As capital fled New York, the Plaza District asset was undervalued. But Stephen L. Green wasn't afraid of bad headlines. The bet paid off. Even when the 2008 financial crisis slowed leasing activity, the building's Class A pedigree held firm, proving that prime addresses, while vulnerable in the short term, have resilience over the long haul. That same fearless mindset led to acquiring One Astor Plaza in 2002. With Times Square's future in question, S.L. Green moved quickly to secure the 1.7 million square foot tower, anchored by Viacom, now Paramount Global. Long-term leases and a stable tenant roster turned One Astor into one of the firm's steadiest, most reliable performers. As the years passed, S.L. Green didn't retreat into comfort. Instead, the firm began expanding its reach into real estate debt capital markets. In 2014, under newly minted in 2004 CEO Mark Holliday, the company made a bold move into multifamily real estate, providing a $50 million mezzanine loan to the Moynihan Group for Sky Towers, a 71-story luxury rental on 42nd Street. Smartly negotiating an equity conversion clause, S.L. Green converted its debt into ownership when the project stabilized at 90% occupancy. By 2021, they exited for $53 million against an $850 million valuation. It was a textbook play, and personally, this was the building that first caught my eye, the property that made me want to learn who S.L. Green was and how they operated behind the scenes of New York's skyline. Then came one of their most audacious moves. In 2022, after the financial unraveling of the previous owners of 245 Park Avenue, S.L. Green foreclosed through its mezzanine loan position. It wasn't glamorous. The building came with heavy capex demands and an immediate earnings drag. But true to form, Mark Holliday and his team stuck to their strategy. A subsequent takeover was a validated move, and today, occupancy is climbing, leasing activity is on the upswing, and the asset is regaining its stature. At first glance, S.L. Green Realty Corp. (SLG) might appear to be in recovery mode, with its stock climbing over 25% year-to-date as of July 2025 during a time where new politics are now scarring New York real estate power players. But a deeper examination of its financial mechanics reveals a nuanced, high-wire act, balancing ambitious capital spending, negative earnings, and growing operational momentum. Over the trailing 12 months, revenue totaled $938.2 million, marking an uptick from $886.2 million in 2024. That growth was driven by higher rent rolls at One Vanderbilt and improving Midtown leasing. Gross profit improved to $464.6 million. Yet despite top-line growth, net income remains negative at negative $29.05 million in the last 12 months. This is largely the result of high interest expense, over $193 million in the last 12 months, up sharply due to higher floating rate debt and recent refinancing activity. CapEx-heavy repositioning projects at 245 Park Avenue and other legacy assets, and elevated operating expenses, over $240 million, to maintain premium-class service standards. S.L. Green Realty has long carved out a reputation as Manhattan's great contrarian, a firm unafraid to double down on Midtown real estate when the world's financial elite head for the exits. As of July 2025, its financial profile reads like a study in sharp contrasts, yet weighed down by debt, capital obligations, and the unforgiving math of a high-yield dividend. Total revenue for the trailing 12 months has climbed to $938 million, marking a 5% gain over 2024's $886.3 million. That top-line growth has largely come from rising rent rolls at its flagship One Vanderbilt Tower and signs of stabilization at 245 Park Avenue, both of which now command Class A pricing in a still fragile leasing market. Yet despite this revenue growth, profits remain elusive. Net income attributable to common stockholders sits at negative $29 million, a vast improvement from the harrowing negative $582 million loss in 2022, but still firmly in the red. Operating income of $224 million reflects decent property-level performance relative to its peers, yet heavy non-operating costs and towering interest expenses, $193.9 million in the last 12 months, continue to erode bottom-line results. SL Green Realty remains one of the most levered office real estate investment trusts in the country, a fact not lost on investors. Its market capitalization now hovers around $4 billion, with a beta of 1.63, signaling both volatility and sensitivity to shifts in interest rates and Manhattan office sentiment. No surprise, then, that the company trades without a usable P/E ratio, as EPS remains sharply negative at 42 cents per share. The result of aggressive capex, rising borrowing costs, and continued impairments tied to its repositioning projects. Free cash flow clocked in at $160 million over the past year, modestly ahead of $129 million in 2024. But capital expenditures, embedded in investing cash flows at negative $53 million, remain understated. Trophy towers like One Vanderbilt and complex repositionings like 245 Park come with persistent maintenance and tenant improvement costs that stretch well beyond headline capex. Total debt stands at $4 billion against just $337 million in cash, yielding a net debt position of $3 billion. The financing picture reflects this tightrope act. SL Green raised $1 billion in new debt over the past year while retiring $1 billion, a delicate balancing act under rising rate pressure. The company's debt-to-capitalization ratio now sits at 62%, meaning nearly two-thirds of its capital structure is debt-financed, well above sector peers like Boston Properties or Vornado Realty we have talked about before on this channel. Liquidity remains thin in the current landscape of SL Green Realty's balance sheet, with a rough quick ratio proxy indicating tight cash positions against near-term liabilities. Despite these financial strains, operational performance has improved modestly. EBITDA rose to $414 million in the last 12 months, up slightly from $409 million in 2024. While reassuring, it's not yet enough to decisively outpace the capital and debt service obligations required by Manhattan's high-stakes real estate game. Investor sentiment remains extremely sensitive. As of mid-2025, SL Green's financial posture is one of partial recovery, marked by solid revenue growth and property-level resilience, but haunted by heavy leverage, capex demands, and a dividend increasingly at risk. The stock's 25% year-to-date rally reflects optimism around Midtown's rebound and high-profile asset sales. Yet until free cash flow can reliably cover both capex and dividends, the stock likely trades with an embedded risk premium and at a discount to its net asset value. In short, this is a real estate investment trust for bold, yield-hungry investors and deep value hunters. A bet on New York's revival, but not yet a safe one. Make no mistake, the path ahead isn't without peril. Interest rates are higher, urban office demand is evolving, and policy headwinds loom. Yet history has shown that the companies who endure in New York real estate aren't the timid ones. They're the risk takers, the visionaries, the builders who turn downturns into dynasties. SL Green's stock is no longer just a play on office leasing. It's a wager on the enduring gravitational pull of New York City. Because for all the headlines about remote work and corporate exits, the city's skyline still signals ambition, and its streets still pulse with deal-making. And in this metropolis, you don't wait for the storm to pass. You build through it. SL Green has done it before, and if their history's any guide, they'll do it again.
Thank you for watching. Make sure to like and subscribe if you haven't already. I appreciate all the love.